Lisette and Emiliano, is this what you guys were seeing in the market?
Yes, bro, exactly that.
Yeah. Clutch, man. It's super clutch. When you see it, you can't unsee it. And if you logically know how to apply it, you know, it's all just a matter of controlling your emotions along the way. Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be doing a deep technical analysis dive on a trading setup that some of the CYPRX students caught in our private mentorship program. If you all enjoy deep video breakdowns like this, going over the strategy that we trade here at CYPRX, make sure that you smash that thumbs up button and subscribe to the channel. We do appreciate the love and the support. If anybody's interested in our mentoring program, as always, the link can be found in the description below. Many blessings to you all. Let's jump into the charts. All right, cool. So we're going to break down today's JPY trade from the chat. What it looks like is that only pretty much Lisette and Emiliano were involved in the markets this morning, from what it is that I saw. Now, we know that today was high impact news due to the Federal Reserve interest rate that came out, the announcement, 25 basis point rate hike from the Fed. So I personally sat on the sidelines of the market, but today, again, remember, in yesterday's Zoom call, I know that Emiliano and Lisette there was also Anthony and Amir on the Zoom call as well, but I was explaining to them the new parameters that I'm going to be attempting to trade the rest of this year moving forward, which is only 2 specific trading days out of the week, which are Wednesday and Thursday at specific times during New York session, Pacific Standard Time here in California. So I'm giving myself only 2 trading days per week, excuse me, and I'm only trading from 6 a.m. Pacific Standard Time to 8:30 a.m. Pacific Standard Time to see a certain onset of the CYPRX confluences that we look for to play out in the market, which I'm going to go over for you all here today, which I'm pretty sure that Lisette and Emiliano were seeing this morning. So obviously, of course, as intraday traders and scalpers, we're going to start on the hourly or the 15-minute time frame, whatever your poison is, understanding that trading with that momentum, either buying at a discount or selling at a premium, is your best bet to be trading in tandem with the higher time frame. So let's just go over some of the simple principles on the 15-minute chart that we talk about, which is identifying areas of interest if you're going to be a buyer where previous banks and institutions bought from, based off the simple ideology that bank and institutions are most likely inclined to buy at a discount, even if, let's just say, for example, GJ did dump right now, which I'm going to get into in just 1 second as to why they could potentially be selling from this area and why they did buy during their New York session. We, as the majority of individuals involved in this community, like to buy GBP JPY. So if you're looking for buy setups, you want to be buying from where a previous bank and institution bought from. So having your session indicators turned on, which is one of the indicators that we use here at CYPRX. Again, we're not indicator-based traders. This is not an indicator that tells us where price action is going or anything like that. It just shows us on the charts the previous session's price action split. Okay, so 15-minute chart, you guys can see previous day's session. London bought from this area. Again, we're looking for a higher low that led to a higher high in price action during a session rollover. So you guys can see here, this London session bought at this significant low, liquidating all of the lows that were pre-engineered if we were to scale down to the lower time frame. As a matter of fact, I'll do that for you all now just to show you. Okay, again, why we're gathering this area of interest as where we could be potential buyers from, highlighting from the candlestick bodies down to the wick to give ourselves that general area of discount where we want to be buying from, based off, again, the simple principles that banks are most likely going to buy at this area of discount because that's where they bought from in the past to drive price higher, okay, after liquidating lows. So we'll go and we can see bullish order flow here. This London session during the manipulation region, which again, I won't give specific times because I might upload this to YouTube, okay? We know those manipulation window times, drawing on our manipulation box. You guys can see pre-engineered lows in the market, the bank and institutions showing a willingness to liquidate those lows, test the strength of buyers, buy a second time after manipulating these lows here that were pre-engineered during the manipulation window and sending price higher, creating the definition of bullish order flow, which is higher lows and higher highs in the market. Okay. So very simple, just to gather areas of interest, which I'm sure Emiliano and Lisette were both doing. You guys can see back on the 15-minute chart now, extending that area, again, highlighting from the candlestick bodies down to the wick, all the way over to the session that you're going to be operating in as a potential buyer. All right. And you guys can see, kind of zooming out, how the market rallied from that area and has since pulled back into that area. So just to give yourself a higher time frame confluence, again, if you're going to be a buyer, you want to be a buyer when price is at a discount on the hourly or the 15-minute, because we're intraday traders. Personally, I don't go any higher. If it floats your boat to go higher, like the 2-hour or the 4-hour, that's all according to your trading parameters. I personally don't. The hourly is high enough for me. Okay. So you could be taking your Fibonacci just to give yourself a higher time frame confluence from the low to the high, extending that over and seeing that price is indeed operating at least 62% discount. Okay, you guys can see that during London session, it was operating at 62% discount. During this New York session, it was operating below 79% discount from where previous London session banks bought from. Again, just simply basing your head around the fact that if you're going to be a buyer, you want to be a buyer from where previous banking institutions bought from based off the piggyback methodology. Okay, so that's one confluence, higher time frame. Now let's kind of get into a little bit more of the logical side of things. All right, I want to take your attention down to the 5-minute. All right, let's look at what price action was doing when New York session opened based off of what previous banking institutions did. So we already know based off of the 15-minute chart that this white box right here was the area of interest that we drug over from the 15-minute chart where banks bought from during London session in a previous day's worth of price action. Well, you can see, remember, this is the area where the daily candlestick resets itself. So this is a new day's worth of price action during the New York Asia session rollover. And you guys can see the intention of this Asia session was to liquidate highs. Okay, you guys can see how they left liquidity in this manipulation window here above highs. They liquidated those highs and sent price lower. Same thing here with this London session. What did they do? Manipulation window, highs. They liquidated those highs and sent price lower. Now, again, just based off of logic, let's look at where price action was during New York session. Okay, you guys can see based off of logic, what do I attempt to teach you guys? That New York session, they're not going to sell from a low on the higher time frame, right? So remember, if this is that 15-minute or hourly area of interest where previous banking institutions were buying from previous London sessions, and these are the areas where previous sessions were selling from, what do you think, logically speaking, New York session is most likely inclined to do? Okay, if you were to just highlight, so let's just say, for example, again, as above, so below, let's flip our charts right side up. Okay, now we're looking at this price action as buys. If you were highlighting from where Asia session bought from and extending that over to the right-hand side, and then you were also highlighting from where London session bought from and extending that over to the right-hand side, you can clearly see now as above, so below, that New York session did not have the opportunity at the beginning of their session to sell from where previous banks during Asia and where previous banks during London were selling from. So what were they most likely inclined to do? Buy at a discount from where previous banks bought from, to manipulate and liquidate all of the early sellers that come in prior to the session that were guessing the directional bias of this market. And I'll get into that in just one second. Prior to the what announcement that came out this morning, the federal funds rate, they were guessing price action, right? Taking sellers or taking sell positions from above these highs. Maybe they had some type of retail pattern drawn on here. You guys can see that formation potentially forming. We see maybe a potential trend line here, right? You can kind of even see retail resistance here in this area. Let's go right there, right? A touch here, a touch here. Maybe this to a retail trader is a double top formation, right? Where you can imagine prior to the New York session, they were most likely taking sells prematurely, trying to guess the directional bias of the news fundamental that was going to come out and move price. We know here at CYPRX to trade the market logically. Well, if previous banking institutions were selling from these highs, New York session clearly was not operating in that premium area on the 5-minute chart when the session opened. On top of that, we were operating in the manipulation window here. So I'll draw that on for you all. Okay. And we have this area of discount drawn on our charts from where previous London session buys operated at in the market. You guys can kind of clearly see what the intention was today during New York session was to buy at a discount where previous banks bought from, to drive price higher, to manipulate all of the early sellers out of the market and liquidate those positions so that they can now take sell positions where previous banks during Asia and previous banks during London sold from. And you guys can clearly see that sell momentum now picking up. If we extend these areas all the way out to the right-hand side, they tapped New York session, tapped right in to where Asia session sold from, created a failure swing high, and is now sold off, right? So you guys can kind of get the logic. And how can that help you understanding that during the trading session of New York? Well, if you're piecing that together in the live market, like Lisette and Emiliano did this morning, you can use that to your advantage to say, okay, well, let's just rewind price action just a little bit, just to kind of gather this logic. Number one, we do not touch the markets when the market is in this manipulation window. So that's an advantage right off the bat, because we can identify early buyers and sellers in this market to say, hey, let's wait for price action to break out of the manipulation window and see what type of pattern it generates after the news fundamental comes out. And if it reacts to this discounted area, and what else can we use to our advantage? Think about it. We don't trade support resistance. We trade what here at CYPRX? Can somebody give me that answer?
Psychological levels.
Psychological levels, right? Okay, so what's significant about this area that price action is operating at when price breaks out of the manipulation window? I'll draw that on for you guys real quick. We see a major, right? The 200. And remember, the majors on GBP JPY are the 00s, hundreds, hundreds, and hundreds. And then it repeats the 00s and so on and so forth. Well, here you guys can see the 200 major. So once price breaks out of the manipulation window, you can ask yourself a couple of questions. Do we reject the major psychological level? And if we do we create that institutionalized pattern that is giving us an identifier that price could potentially go higher, which is a pre-engineered low, a liquidation event that takes place, and a momentum in the market that comes in that takes price higher to break previous market structure, signaling to us that the market makers are not wanting to drive price lower and instead are creating a what? Bullish order flow environment, which gives us the ability to take our fib from the low to the high and get in at a discount to take price higher, which is exactly what Lisette and Emiliano did today. Again, under the logic that what? Banking institutions, New York specifically, are most likely going to buy from this discount to push price up into where banking institutions sold from during previous sessions to take their sells. Anybody with a brain would know that on the higher time frame, again, banking institutions are not going to continue sell pressure most likely from lows. They're going to want to sell at a premium from where banking institutions previously sold from. So with all that information in mind, all right, so there's our first rejection of the 200 level. Let's see again if we fail to close bearish below and create bearish order flow underneath of the 200 level. There's another rejection of the 200 level to break. So same thing here. We see a low at the 200 level, a liquidation event. And now what formation are we starting to see here? We're starting to see bearish momentum equaled out by bulls in the market, which gives us a signal as CYPRX traders that the market makers have no interest as of right now pushing price lower, alongside all of the other logic in the market that we've already pieced together. A lot of people will say, oh, hindsight testing is rubbish. But in reality, if you were looking at the market this morning at New York session open, you would have had all of this information to gather, correct? You would have. You would have, in fact, had this Asia session to identify that this is where they took sales from. You would have had this London session to identify that this is where they took sales from. You would have had the ability to draw on your manipulation box to sit on your hands. You could have been able to draw on your 200 psych level, and you definitely could have been able to identify all the way back in the day during this London session, this is where they bought from to drive price higher to create bullish order flow, which is higher lows and higher highs in the market. That is a fact. So don't be the type of person that says hindsight testing is rubbish, because as soon as New York session opened, this is all the information that was readily available to anybody involving themselves in the market today, okay? It's up to you to be able to logically piece all that together to give yourself an advantage in the market, okay? So now, again, let's go back to where we were at in price action. Okay, we see a low liquidated. We see a bullish match of momentum. Again, signaling to us that potential bullish order flow is about to come into the market. Understanding logic that we want to see price come up into these highs where previous sessions sold from. These could be your what areas?
Targets.
Your target areas, right? Your take profit areas. Why? Because we know that overall, as of right now, higher time frame, GBP JPY is kind of bearish. It just had that massive rally that pushed to new highs all the way up into the 72, almost the 72.5 in April. Okay, and we're kind of pulling back from that right now. So overall, on the higher time frame, GJ is taking a breather. That's necessary. In order for the market on the higher time frame, i.e. the 4-hour and the daily, this pullback is necessary on GBP JPY. We still have a dovish Bank of Japan. We still have a hawkish Bank of England. So on the higher time frame, we know that these drastic pullbacks on the lower time frame are going to come into fruition. And if we want to get in on those, we have to allow the market to breathe, but understanding fractally that buys are going to give us the best setups. We can continuously scale into these positions when we see opportunities fit. All right. So here we see that V momentum away from the psychological level. Do we break structure? Yes, we do. These candlestick bodies right here are starting to take out all of the bearish pressure. So now we can identify this here as a low in the market, a liquidation event that takes place here, equaling out bullish momentum in the market compared to this manipulation move that just took place. How can we tell that this is a manipulative move right here? Because afterwards, we did not create a lower high, lower low formation. We did not create bearish order flow. Instead, we created a higher high formation. We don't know what's going to happen next, but again, identifying a potential break in structure, we can say to ourselves, all right, let's wait till this price action starts to pull back, and maybe we can get in at a discount. Again, looking at this price action that I drew over here for you all. Once the market creates a low, liquidates that low, we're looking to get in at a pullback to take price higher. And look at how this all plays out. Again, keeping in mind that banking institutions are not going to sell from these lows. How are we at a low? Because we're clearly not at a premium where Asia session sold from or where London session sold from. But however, we are at a discount from where previous London session banking institutions bought from, okay? Which can again solidify that most likely what we're going to see is then push price action up into premium to then take sells. We're also failing to break psychological levels alongside of creating bullish order flow on the lower time frame in the market, which is a liquidation event beneath lows, a break in market structure taking price higher, creating new market structure highs. Let's play some price action now. All right. So remember, I attempt to tell you guys, because there's a lot of people that put in those what if scenarios in the market, like what if this, what if that? How can you tell when price action is going to start to pull back or when you should draw your Fibonacci on? I like to say, once price has topped out and the market has pulled back at least 25%, that gives you a parameter to draw your Fibonacci on. This candlestick, these two candlesticks right here, is at least a 25% pullback of this bullish run that just broke this market structure on the 5-minute. So take your Fibonacci now, draw from the low. Remember, we'd be on the 5-minute chart. So we would have time to do all of this when we see this candlestick, okay? You could take your Fibonacci from the low to the high that broke this previous market structure, set yourself up an area of interest. Now, for me personally, I like that 79% discount. Some of you all may like the 62. Some of you all may like the 66. Some of you all may like the 70, okay? As long as, in my personal opinion, this is how I trade, price has at least surpassed that 62% discount, that gives me the green light to say, okay, do I have a sound risk to reward ratio, placing stops beneath lows and targeting highs? Where are the highs that we want to target? Again, all of the premature sellers that were attempting to guess the directional bias of the market and sell New York session early. Those could be your take profit 1. And your take profit 2 can be the premium sells from London or Asia session the day before or the session before, right? And I'm pretty sure that this is exactly what Emiliano and Lisette were doing. And if I'm wrong, correct me. If you guys saw something different than what I'm explaining to you now, let it be known. As we see here, price taps straight into about the 79% discount. So my entry more so would have looked like this. Okay. We fail again to create a lower low beneath the 200. So that could have been another confluence that you add on. And we again create a what? A higher low formation, which could have given you the confidence to hold this trade through. Okay. Because you know, at least what? If we're going to create bullish order flow, we're going to at least create another what in the market? A higher high, right? If we're going to print bullish order flow, that can give you the confidence to at least hold the trade through, right? The market pulls back a little tiny bit, boom, there's your potential take profit 1, okay? Where all these highs start to get played with and liquidated, okay? Take profit 2, again, would have been a little bit longer. We'll go ahead and we'll measure this out. I'm pretty sure that this is the trade this morning that Emiliano and Lisette caught. Right, let's look at that. Yep, exactly. You can see where Lisette drew her Fibonacci from. The higher low after the liquidation event from the high, entered in at the 79% discount. Beautiful Lisette. Same thing with Emiliano. Okay. So this was the trade from this morning. Absolutely phenomenal. It played out almost to the T. Now let's just see how long it took for them to take and push price up all the way up to that premium to where they have now sold off from. Just to solidify what it is that I'm attempting to teach you guys time and time again. If you just understand logic in this market when you're looking at price action, like you understand that this is not going to happen every single day. But most likely, I'd say 8. Okay, let's just say, for example, 5 trading days out of the week. You can almost guarantee that this type of logic is going to happen in the market at least 4 out of 5 days. The days that it usually doesn't happen is when some type of high impact news takes precedence in the market and the market makers use that news manipulation to just freaking send price crazy in crazy directions. And you guys know exactly what I'm talking about, those God candles that you see, okay? But if that's not the case, and you have this type of clean price action, this is honestly some of the cleanest price action on GJ that you can ask for buy scenarios, in my personal opinion. It's like literally textbook logic in the market, identifying areas of interest, avoiding manipulation, applying the time efficiency paradigm that I teach you guys. Obviously, of course, I'm not going to go over that because I'm going to upload this on YouTube. But again, remember, I'm going to be trading. Let's just go over this real quick.